All right, Max, we are live. It is May 14th, 2025. I'm on the West Coast. It's about 12:32. I know we're doing
All
this a
right,
little
Max,
bit
we are
early today.
live.
Yep.
It's
Yep.
May 14th,
Let me make
2025.
sure. If you want, go ahead and mute yours. Mute your
Yeah.
side. There we go. Cool.
There.
All right. Um quick update for you guys. I did just do a little bit of a stacks update. So if you guys have not seen it just yet, make sure you go onto our YouTube. Go ahead and take a look at our updated stacks AI back test. I do have some of the quick numbers for you guys here. Last month's hit rate was 86%, but our average over just yesterday actually jumped from about a 70% up to 124%. So pretty awesome numbers. I did get some people asking me in terms of the returns, where they should get, start taking their profits, things like that. If you do consider just these numbers, 75% of our prints get you at least 25%, and about 60% of them, just a little under 60%, get over 50%. So some numbers for you to consider. If you are in the Discord, I will share these numbers with you guys a little bit. Put the image up so you guys can do your own, your own analysis and get an idea of what you guys want to do with your Stacks AI prints. Now, with that being said, let's go into today's Stacks. I'm just gonna leave this up for now. We're just gonna reset it. I usually keep it on Stacks AI. Get an idea of what the market's doing as we go into close. I'm gonna have Max over here do a little bit of a analysis. Just he actually does this on his channel for Trades and Gains. And if you guys have a chance, go ahead and take a look at that. It's on a daily basis, guys. Some great information. He's gonna review the tape from Stacks AI or Stacks in general. Tell you guys what the dark pool looks like, where where they're buying, where they're selling, what the dark pool equity looks like. And again, it's extremely useful information for you guys. Just so you guys know, in here you do have the ability to turn on some of your notifications. There is a YouTube video we put together for you guys to do that. And also, just so you guys have a little bit more real estate on this page, I'm going to disable the insider trades, politician trades, and market events, so we have some more room on here for you guys to see. All right, I'm going to turn it over to you, Max, for now. Let's go over and talk a little bit about what's going on in the markets today. And let's also, when we are done with that, we will do a bit of our earnings review, get an idea of what's coming up in earnings in the next couple days, what's coming up after market hours today as well. See if we can get to that before market close. So if there's any sort of good positions, we can share that with our audience.
Yeah, 100%. So looking at flow right now, because we're just gonna I just kind of want to see this run for a couple minutes. And while this runs, let's talk about kind of like what happened with tariff pause, what that means for the market, and then also CPI and what that means for not only rate cuts, but what we can expect to see out of flow with this as well. As you can see, we have GLD puts being sold already. And that kind of aligns with those heavy SPY prints and QQQ prints that we've been seeing throughout this week for puts, regardless of the market pumping. And as I think it was yesterday, the S&P 500 officially wiped out all of its losses. So from a 15% drawdown from the top of 2025, it was finally able to break even. However, with our tariff news, as you know, reduced from 145% to 30%, and China dropped theirs from 125% to 10%. There's a 90-day pause in trade tensions, and the objective of this really is to lay groundwork for new negotiations, ease inflation, and market pressures as well. Again, that's when the S&P started to rally. We saw a 3.2% rise within that in a single day. Industrials and semis all started to catch some momentum as well. Commodities started to take a dip. That's where we saw gold start to lose. I think it lost like 2.6% that day, and broke back below 3,000, I want to say. So I don't know. I think with the tape, it's going to be very mixed. It's going to be a lot of hedging. It's going to be a lot of, like we saw with Microsoft this morning. Um, we had those four golden sweeps hit the tape like first thing in the morning today, and it was like in a row. And that is the one thing. If you guys go to my Twitter, I do tweet out patterns that I start to identify within the market and within certain tickers. And if you give me tickers to analyze as well, I also kind of keep like a watch list window where the stuff you guys want to see is really all I'm tracking for that time being. But yeah, overall, today was I would say it's more of a mixed bag. We didn't really have any news, nothing that really moved the market. We have PPI tomorrow. CPI yesterday was a pretty good showing. Some of the highlights, though, food prices fell. They fell 0.1% month over month. Energy was a mixed bag. Natural gas was up 3.7% month over month. Electricity is up 0.8%. Gasoline's down 0.1%, but up 2.9% on an adjusted rate. Shelter is still sticky. We have rent up 0.3%. Medical and services are up. Medical care is up at 0.5%, and used cars, travel, and apparel have fallen. Airline fares are down 2.8%. Used cars and truck are down 0.5%. Apparel's down 0.2%, and lodging's down 0.1% as well. Our next reading for CPI that we'll be tracking is June 11th, 2025 at 8:30 a.m. as well. However, one thing to note with it coming, it was what, 2.3%? That is the lowest reading we've had since 2021, to give you perspective of how horrible inflation has been over the last 4 years, not even over the last year, for the roller coaster that we have been on. But I will say, don't expect a rate cut in June. Those bets are shrinking very fast, and the bets for September are coming up. As I mentioned in our podcast yesterday, I cannot deal with another August of Fed buyer's remorse because they showed their hand too early and then the market has to pay for it. I think we're on a good trajectory with where things are going, and we should start seeing some more of that SPY activity that we've been seeing at the end of sessions now. So it looks like 0 days are out, boys, and swing plays might be the new move in order to maximize your gains and also not get IV crushed in a single day. Because as you can see, if you look at the SPY chart, it makes a move within the first like 30 minutes, and then it kind of trades sideways and then sells off into the end of the day and then gaps up at some point, whether that's in after hours or pre-market. And it's kind of just been on that same rhythm, and it'll do that until it hits about 620 before that next CPI reading. So I think 620 is like that next big target for SPY, because that is where we saw a big sell-off from the last high point. So it's starting to fill that gap to the 600 level that it wants to look at there. So definitely keep an eye out on SPY, calls flowing in, and hedges for that matter as well, especially with any macro data that we have coming out going into our next CPI print for June 11th.
Yeah, very good. One of the big headlines that I kept seeing was how inflation has come down a bit, right? If you notice. I think the reading that they were expecting was 2.4, came in at 2.3.
Yeah.
Keep in mind, it's a batch of statistics that they get to choose. So at the end of the day, there is a bit of a narrative that they're trying to play out here, trying to get us to understand. Obviously, out here and on Main Street, when you consider it, prices are still up overall. We had a lot of inflation back in 2020, 2021 that really pushed things up. And yes, inflation is down in terms of month over month, down in terms of comparatively to before, but prices are still fairly high. So the consumer is, what they say is like the affluent consumer is starting to slow down a little bit. The general consumer has been struggling, and I'm sure you can understand. You talk to your neighbors, talk to your family. You know, people were complaining about egg prices for quite some time. They have dropped, but at the end of the day, groceries are still expensive and have gone up quite a bit. But I do think we will be retesting these recent highs from the early 2025, where we did peak out a little bit over 600. So we'll have to see what ends up happening there. A quick note too: when we were down in these fearful levels, keep in mind we go check that CNN fear and greed report. You can see we're back into greed territory right now, actually, and the markets were extremely fearful. As the great Warren Buffett has said, you know, be fearful when others are greedy, be greedy when others are fearful. And you can kind of notice we are starting to get to these levels where we're going to hit a little bit of previous support, now considered resistance. We'll start to see a little bit more chop up. We'll have to see what the continued reports of earnings and what these corporations have to say about, you know, what's really going on. If you guys are watching right now, by the way, noticing we've got quite a few watchers, go ahead and leave us a comment in the leave us a comment in the YouTube. I am watching it. If you guys have suggestions of things you want to see, please leave that in there. Comment stacks so I know that you're watching and it's not just bots out there. We're trying to get a little bit more engagement so we can see you guys. And again, we're going to do this on a weekly basis, get you guys the information, talk a little bit about what we see in not only stacks but on our charts and what earnings have to offer us in terms of some potential lottos or high risk, high return plays in those situations. But did we go over Tesla flow and our thoughts on it? Not just yet. Go ahead, comment down what other tickers you want us to go over. We'll definitely try to get to those. We want to do a little bit of what's coming up with earnings real quick, and then as soon as market does close, we'll try to get to some of those additional tickers that you guys are talking about in there. I know Tesla's been running up pretty crazy. Let's just take a quick look over at the chart. All right. If we take a look at the chart, we are in this area where, you know, if we're able to break above that 356 range, there's a lot of lower volume in there. You know, in terms of this volume profile, you might see it shoot up towards that 380 range. In terms of the news, haven't been too, again, I think it just has to do with the tariff pauses. And that's, you know, a lot of money's flowing back into the markets because what we're thinking about here is what type of uncertainty was there? When the tariffs were in place, there was a lot of uncertainty. Now that we've got a 90-day pause, you know, that uncertainty's dropped. The ability for products and for our supplies to start flowing has activated quite a bit. But we got to understand it's not, you know, we're not completely out of the woods just yet. We have to remember that. And like we, you know, just said, we are now back into positive territory for the year. And it's pretty crazy how, you know, that a couple tweets, that news brought us down to these lower levels. You know, a bunch of supply got taken up, and now we're headed back up toward previous resistances that we've had before. Let's go ahead. Let's see. I'm gonna go. Yeah, go ahead.
We got Cisco.
Okay.
We got Cisco hitting after the bell. I just got done writing up. I'm doing write-ups, by the way, for some interesting earnings that I'm looking at. First one I did was Baba, but that's not till tomorrow. Cisco reports after the bell, so we could maybe find something here. Their Q3 2025 is today. Revenue, analysts are expecting 14.05 billion, 11% year-over-year increase, with adjusted EPS coming in at 92 cents, up from 88 cents in the same quarter last year. Guidance, Cisco has projected Q3 revenue. That's a good sign, by the way. One thing to note, these old, as my mom and dad call them, these old white people companies of Silicon Valley are going to be the key leaders of this tech bull run, but they're just very quiet about it because they move in silence, and they're typically the standard that these new companies are starting to pop up that they're trying to meet. Because believe it or not, Cisco Systems was what NVIDIA was at one point in their
Yep.
heyday. So key focus areas for them that we want to hear about, or for their projected Q3 revenue, 13.9 billion and 14.1 billion, with non-GAAP EPS of 90 to 92 cents. That's all positive news. Also, AI infrastructure is going to be a key focus area. Uh, they reported 700 million in AI related orders in the first half of fiscal 2025. We have a Splunk integration. They acquired them for $28 billion in March of 2024, by the way. So we'll start to see, and as we've mentioned before, and Eric, I know I told you this, there's always like an 18-month window between an acquisition or a partnership before it starts to play into earnings. This is a perfect example of that. Gross margins is another one. And really, it's going to provide insight into its transition from traditional networking hardware to a broader focus on AI and cybersecurity. So, really, this is going to be, and I'm not shocked by the amount of puts that are being bought because, again, they're going through a transition of what they used to be to kind of future proofing themselves or trying to carve out an underserved sector using enterprise resources that can beat out a lot of these smaller startups, to be honest. So it'll be interesting to see, like, yeah, a lot of puts for 516. If we're just looking at the ones that in that little block right there from 512,
Yep.
there's about 801K in one of those. So definitely definitely someone is not confident in their I'll be honest, I think this is going to be the biggest earnings report after hours.
Yeah, I think it's the main one that people are looking on.
Yeah.
Um, to quote you, actually, it was earlier. Um, what was that? You said something in terms of earnings. I want to quote you. I'm looking in the Discord here. About future guidance and the skid mark in these earnings.
Oh yeah, it's the biggest Achilles heel. Like earnings, the fact of the matter is most companies, because of the 90-day tariff thing, they kind of got screwed because they didn't give earnings because they're like, we don't know what's going to happen with tariffs. And then literally like a week later, it's like, here's what's going to happen with tariffs. So like they end up falling flat because of it.
Mm-hmm.
So it's just one of those things where if there's no guidance given,
Yep.
then typically a big partnership is going to be announced, a move to some kind of pivot to direction is going to be announced, or in this case, I think Splunk is that like catalyst for them
Yeah.
because again it's that 18-month window we talk about when we're talking about an acquisition and seeing that software actually take an effect on the stock price. So I like puts here,
Yeah.
to be honest, because I'm a little more bearish on the outlook of what their impact in AI and cybersecurity is when they were a hardware manufacturer for like not just 10 years but like 30 plus years.
Yeah. The quote you hear 2 days ago said, "I swear to baby Jesus, guidance or lack thereof guidance for future quarters have been the poo streaks in companies' underwear." And I 100% agree. You'll see, I think it was Snapchat where they were unable to give future guidance for the next quarter, caused their stock to tank. And you've kind of seen that as the ongoing theme for a lot of these is if a company is afraid to give out that future guidance because they're uncertain as to the outlook. Like I said, uncertainty is something that causes that type of panic, causes people to sell off, and that's one thing that's been kind of the theme right now in terms of these markets. Let's quickly jump over to BABA since we've got a few minutes before things close off for the markets today. I will point out for me, I've had this BABA chart for a little bit now. Let me show you guys here. There is this accumulation zone that's been going on. We did drop back down into a buy up and last point of supply. We're headed back up into that. I drew this blue box a little bit ago. Earlier did believe that we were going to break up beforehand, but I guess, with tariffs and things like that, we've dropped lower. But we still did make higher lows on that low side of it. So this Wyckoff accumulation, I think in due time, we will see this headed up further. I've been hearing a lot of mixed things about what's going on in China. There's some reports of how factories shut down, they're striking, they're very unhappy as to what's going on with the tariffs. Then there's on the other side of the talk of how they've acquired more confidence with other trade partners, finding ways around things so that the tariffs aren't exactly affecting them as much. It's affecting the U.S. more. My thought here really is that, just like throughout COVID, there's a big attack on small business. The big winners here are just going to be the corporations. The corporations are going to absorb the smaller interests. The small businesses, you'll hear it. You've seen it. People that had to deal with the tariffs weren't able to, weren't able to get their supplies, weren't able to get their stock, stuff that were stuck at the ports. And ultimately, the big losers here are going to be the small businesses. The big corporations, they'll absorb it for a little bit. They'll put a pause on things. They have interests with the politicians, where at the end of the day, they might be able to wait it out. They might be able to pay, or actually wait it out and then pay a little bit later, or create deals with some of these tariff numbers so that they don't have to pay as much at the end of the day. So overall, I would say with Alibaba, I would be leaning bullish in terms of the long-term picture. The hard part right now is, do we see the current pause of tariffs? Did they boost, China exports for a little bit? Because a lot of people jumped into getting additional supplies, tried to buy as much as they could before the tariffs did truly hit. Is that going to be reflected in this next earnings reports, especially with something like Alibaba that deals with a lot of these manufacturers? Or, is that already priced in, and now we're just looking at this, dead cat bounce, and we might head back down to retest this lower area. So let's take a look at what Stacks has to say in terms of it.
We're at, it's a little lopsided this week. 4.36 million going into calls against 1.3 million in puts. We had a golden sweep for the June 20th, 140 calls, $1.62 million dropped there on those.
We got some puts being sold. Only real buy was these calls out for 140 for next month, which is pretty short term.
Well, the interesting thing is their international commerce is contributed 15% to their Q3 revenues. So to your point, like that could be a little bit of fear heading into them, where I don't think they take off from this earnings report. I think they might see a little bit more of a correction. I mean, cloud and AI is another key business driver for them, and it's been the only thing that's had triple-digit growth for 6 straight reports at this point. And then obviously e-commerce, and they're expecting a 5% growth year over year there. And that's just purely coming from the stimulus measures that they started to input as well. So I don't know. I think the international commerce thing makes me nervous because 15% is more than I think what people accredit it to be when it comes to the bottom line of a company.
Yeah, and what I'm seeing here was there was a lot of buying near that low of around 100 back in April. But in the dark pool, yeah, there was this one just yesterday where they purchased 95 mil at 132. But again, equity they have all the time in the world, so they could be playing this for the long run.
Yeah.
The options here, I will say, not as much flow as I would have expected before this type of an earnings. So I feel it looks fairly cautious. It's kind of a mixed bag here. Yes, there are the only one that stands out here is this call, 1.6 mil for next month, fairly short term for 140. So we could see it pop up a little bit, but again, it's one of those things depending on the guidance, depending on how they approach the tariffs and what they have to say about that, I think is going to be what more so sways what direction this ends up going in. But long term, I would definitely still say I'm bullish on where BABA is headed. It's this, again, the uncertainty for this earnings here.
Or they double down on AI and cloud, lack of sales, or international commerce in this case.
Yeah.
Or they announce something that's related to that, and then the stock potentially flies. But if that international commerce thing plays a bigger factor, then if it plays the actual 15% that it's going to play for Q3 and it doesn't come in at 15% for Q4, then we could see some. I think 120 would be like a fair.
Yeah.
Like
Yeah,
a fair drop.
the thing earlier was that there's so many of them that got in at about 100. Right now it's at 130. If it drops back to 120, 115, they're still in the green. So, it's one of those things where I would have liked to see a bit more buying at this 130 level if there was certainty that this was going to be headed up further right away. So,
Yeah, or gap up.
Yeah.
Who's next? Walmart.
Walmart, yes.
So Walmart, 166 billion in revenue, 2.8% increase. EPS is coming in at 59 cents, which is below the 60 cents reported in the same quarter last year. Same store sales. For the record, guys, if you're going to trade like Target, Walmart, anything like that, anything that is like consumer based, same store sales are always going to play a factor. This is projected to rise between 3% and 4%. But that also aligns with the company's guidance that they gave. And the full year guidance, they're going to maintain its forecast for net sales growth of 3% to 4% and adjusted EPS between 250 and 260. So, and the things about forecasts when you're reading earnings reports, when you see it come out, you want what Walmart says to land between 250 and 260. So if they come in and say 255, great. If they come in and say 260, great. If they come in and say 270, fantastic. If they come in and say 240 though, or 245 or 248, then you go, oh shit. So that's when you panic, is when full year guidance comes out of the range, below the range that Wall Street sets, which is usually between 10 to 50 cent delta typically is what I've seen. So that's really what we're expecting from an earnings standpoint. Key business drivers are going to be e-commerce, membership programs, and higher margin segments as well, such as advertising and financial services. Tariff impacts is their biggest risk. Consumer behavior, again, it's a consumer company. So if people aren't spending money, guess what? They're not making money. And operating income variability. The company has indicated a wider range of potential outcomes for operating income growth due to mixed category demand and rising expenses as well. So really, this earnings report is poised to highlight its strategic focus on e-commerce expansion, membership growth, and higher margin services amidst challenging economic environments. So that's pretty much what Walmart is going to be facing in this upcoming earnings report. And
Yep, totally agree. Is the consumer still spending? I mean, the thing about Walmart is, even in recessionary times, people still need to go get their groceries. And actually, they offer so many different products at Walmart. They still will make money. The question is it going to beat the expectations of what the analysts are saying here? We are approaching, we're at this resistance of what was at December. There is this gap up above that kind of intrigues me here. This little gap up above here from last earnings where they beat earnings but they dropped. We'll see. Again, the big question is what type of guidance do they give? what type of situation is that going to lead to it. So,
I mean, it's interesting. One of the recent prints in stacks is puts that were sold at the 97.50 strike for June 20th.
yeah.
And it's trading at 96.83. So, pretty interesting to see someone sell puts above what it was trading at. Because that was at 3:51 p.m. So that like on on today. So that'll be interesting to see how those play. There's some call buying for this. We have a weekly call, only 12K dropped though. There isn't like anything big for the week. $95 puts, 107K for weeklies. Got bought up here.
You know, the thing
92.50.
is though, there's nothing huge, right? You would expect something like
Yeah.
this where if they have real conviction of what's about to happen, minimum 500K to a mil in terms of a position they would want to be taking. Everything I've seen here, yeah, you got this 600K one right here for over 100. That's the only more significant one in terms of the buys that I see. So, and another thing that gives me a warning here is that there's hasn't been any buying of the equity in almost a month now, right?
Yeah.
So last purchase was back in mid-April. I know some of you guys mentioned something. Our audio keeps cutting in and out. I'm gonna see what I can do here. I just upped the audio bit rate to hopefully that does something. I don't know if that has to do with what's going on with my internet right now. So let's quickly peek back over. Oh, I don't think it's happened just yet. We did just market closed 5 minutes ago. Let's take a quick peek over at Cisco, see if there's any reaction so far.
See here.
Had a little pop so far. No real announcements just yet, but we did see it jump up about.
Oh, hello. You know what printing tendy says though, the first move's always the fake move.
Yeah. Oh no, we got just saw it shoot up to 62.
Yeah.
But that's not, again, like you said, not always. That's just usually that's possibly just a liquidity sweep on the upside.
Oh, there we go. There we go. I don't know. I mean, I'm expecting a drop just because they're completely pivoting away from hardware.
The interesting thing is whether or not their actual report's out or not yet.
I know this might just be all, yeah, there's that.
It's just algos
This
playing
is just
around.
algo manipulation right now.
Yep.
Just making 80 cents on a 20K buy or something.
All right, we'll come back to this in probably like about 10 minutes. I know some of you guys had some other ones you wanted to see. Let's really quick see if there's anything else worth mentioning about tomorrow. Let's take a look at Applied Materials and Kava, I think are the two.
Oh yeah,
For
Kava
tomorrow.
definitely.
Nothing else really stands out to me. I don't know about you. Maybe
No,
John Deere,
that's
but that's, yeah, I would say Applied Materials and Kava.
hey Matt. Let me pull their thing up. Ooh, I got the Cisco chart opened on my other screen. We're at 62.31. We're up at 1% in after hours right now. And I think the numbers just dropped because I just got an alert. No, nope, nope, nope. All right, so Applied Materials. We are looking at revenue to come in at 7.12 billion, which is a 7.1% increase year over year. We're looking at adjusted EPS of 231, which is up from 10.5%. And guidance, we're looking at Q2 rev between 6.7 billion and 7.5 billion with an adjusted EPS of $2.12 to 248. See, there's that range, baby, that we're talking about. Now, our key business drivers for Applied Materials here are going to be the semiconductor systems. This segment is accounting for approximately 88% of its total revenue. Applied Global Services is another, which is projected to generate around 1.5 billion, reflecting a 1.3% increase. Oh my God, Cisco's going parabolic. Display and adjacent markets, these are anticipated to contribute approximately 250 million, which is a 39% increase. And their risks are export controls, and geopolitical tensions. So again, this is another case of just tariffs taking effect and potentially wrecking people.
Yep.
And yeah, Cisco is flying. Jesus.
Real
I
quick with
guarantee.
Applied Materials on my chart right here, we are breaking out a little bit. Wouldn't be surprised to see a retest, but if we are headed further up, this is one of those setups. We had this falling wedge where it's possibly headed up. There's a little gap right here as well, up to 179. So let's go take a look at Cisco. Yeah, I saw Cisco was jumping.
It's 64.23 is its new pre-market high now. Jesus Christ.
Cisco right here just jumped 4 to 5%. Not bad. As people digest the news, we'll see what's going on with it.
I'm not seeing anything. Like
Full year revenue
usually,
forecast is the main thing. Well, I mean, here, I look at it too. Here is if a company is willing to give a solid revenue forecast with all this uncertainty going on, that's where people find confidence within, the ownership within the company as well. Because you have so many of these, like you said, so many of them that are unwilling to give that guidance. So the ones that are confident enough to give guidance and give numbers that probably are going to be higher than what is expected, with everything kind of priced in, that might be the reason why we're seeing this jump like this. Right? They raised their
oh
full year revenue forecast.
wow, that is ballsy. I'm telling you, dude, it's because of Splunk. Like you don't drop 28 billion on a company in 2024 and not have it add to your bottom line significantly. Like that's great. That I told it's that old white people money. This is what this is. You want to know what stocks your parents are buying, by the way? It's Cisco Systems, IBM, like Applied Materials, like boring. The most they are buying beers for the fat girls at the end of the bar.
At the end of the day, it's some of these, some of the most profitable companies are not going to be flashy, right? They're not
No.
right. They've got a solid game plan. They've got a solid business model. They know how to make their money. It's stuff that is essential, stuff that people absolutely need or other businesses absolutely need for their services or production. And at the end of the day, it's not going to be necessarily the prettiest thing. It's not something that you don't necessarily go out. It's hard to advertise for Cisco in terms of what they do because it's a lot of stuff that's more so behind the scenes, right?
Yeah.
But at the end of the day, a lot of big companies cannot operate without their services, and that's where the big money is, business to business. Not necessarily, business to consumer, yes, is great, but business to business is where the big money is going to be made. So yeah, Cisco definitely saw this bit of a pop, right? One thing I want to bring up about Applied Materials, I got to bring back up this. Got to bring back up. I think it was Politician, or was it Insider?
Oh,
Insider.
politician trades.
Yeah. Did they sell already?
Politician
Marjorie Taylor Greene, MTG. She's in on Applied Materials since earlier this month. And she's made some decent picks recently. She claims it's just her stock advisor. She says somebody's handling her portfolio. But she did purchase in on it. There's quite a few politicians that have gotten in on it as well. So Applied Materials, I don't know. Maybe there's something in terms of the politics of it that maybe will, maybe there's something that's going to get passed soon that will help boost the stock price. Maybe there's going to be some funding headed toward Applied Materials. So we'll see as time goes on.
Well, the street also said Applied Materials, the expectation is they're poised to benefit from the ongoing demand in semiconductor manufacturing, particularly in AI and data center applications. However, investors should remain cautious of potential headwinds from export restrictions and geopolitical uncertainties. So it looks like their main thing is just going to be people are going to still need them for hardware at the end of the day. And if that demand is still there, then this should be an easy earnings beat. Who else do we have? Kava?
Yeah, Kava. Yeah, sorry guys. I know you guys are mentioning the audio is pretty bad. I do have this being recorded as well, so I will upload the recorded version of everything. It seems to be going just fine on my computer here. It might just be the way my internet is uploading right now. So what I'll do is upload the video to YouTube afterwards so you guys can get the clean audio afterwards, okay? Ooh, Kava, just selling calls. That's all we see. No real purchases in a while. I mean, Kava was a hot stock for a bit. I look at it as the Mediterranean Chipotle. Now they had a big drop last earnings. I mean, overall, the history of the stock, it's hard to tell what exactly it's about to do. We are kind of in this low volume range, so if we do see a pop, we could see it head up toward 110 pretty quick. Maybe some liquidity up toward that 120. But yeah, we gotta see what they have to say about.
So their key business drivers are going to be digital and loyalty engagement. Kava's loyalty program has delivered notable increases in sales participation, particularly among lower frequency users. Menu innovation, that is a first. Menu innovation as a key driver. All right. And restaurant expansion. That makes sense. The company plans to open 62 to 66 new restaurants in their fiscal 2025, aiming to capitalize on the growth demand for Mediterranean cuisine.
The ugly part about this is we could be seeing a head and shoulders type of formation up here. We've got the left shoulder, the head, and then we might be forming that right shoulder. We could come back up toward this area up here. But if we're unable to break that 120, 123, 124 range, could see it come back down. It's hard with these newer stocks. Newer stocks, sometimes what you'll see is you'll see a quick accumulation, a quick distribution, and then again, the company itself has to continue to bring in revenue. They got to continue to innovate, continue to find ways to keep their consumers. And at the end of the day, if they do that, then we can see this continue to accumulate and go up higher.
So what are we thinking? A drop here? Because these calls are being sold at $101 and $100.
Yeah, what I want to say with stacks is stacks just shows it fairly bearish.
Yeah.
You have a lot of this selling. You got some puts. Nothing that makes me go super urgent on it. But there isn't much buying going on behind the scenes. And that's kind of one of the things that makes you say, okay, well, there's not much activity with it. And the thing is, most of you guys are here to consider the options play. Be careful with these types of names. While they might be businesses that you see around all the time, I know one of Chemo's favorite examples is Lululemon. Yeah, every yoga girl, every Pilates girl wears Lululemon, and it's all over the place. But if you go look at the options, look at what's on the tape, their OI, their volume is extremely low. So understand that while there might be a position to get into, the getting into is the easy part. Somebody's just got to take that position with you. But at the end of the day, selling that position, getting out of it, if the spread's too big, spread's too wide, you're not going to be able to get the profits that you're expecting with it. Because again, the bid-ask spread is so big that you're not going to get something optimal for what you're asking. So be careful with this. I would definitely say with Kava, I'm definitely leaning a little bit more bearish on it, just like you said, especially with what Stacks has to say. And that's just a little bit of insight as to what's going on behind the scenes, the stuff that you're not necessarily able to see. I don't see too many big money situations going on, just like earlier. That's one of the things and concerns of it, where if you don't see big money piling in, it's either it's going to chop around, it's going to take both calls and puts, it's just going to, soak up all that IV, or it's, with what we see here, it's more red than green. So all right, was that it? Any other earnings we want to take a look at? I think that was basically it. Let's go and go into what people are asking in the chat. We have Apple, Tesla, and MicroStrategy. Yeah, obviously there's MicroStrategy. We also take a look at Coinbase too. But let's start off with Tesla, because I know that one we had a big one today, right?
Yeah, I'm tracking that on the watch list, just like that specific position. So I have currently our little 100 million baller. Yes, 100 million is what was dropped. Those are currently at, where are we at? Hey, we're up 2%. So, well, he's up more than 2%. And mind you, this is how big the contract is. So when I added it, it was at a 32.98 average. And it's currently at a 33.68. But again, with how Eric was mentioning with spreads, the bid is 33.60 with the ask being at 33.75, which doesn't seem like a big gap, but $15 on 100 million in options, that's a pretty big gap between your profit and if he sells out. But to give you perspective, when I added it, it's up 2% and it's up $70. So this thing is going to move disgustingly if this bet pays off for him. I can guarantee it.
Yeah, it's one of those situations where whenever you see that big of a purchase, you got to remember, these people are not trying to get into this position to lose out that 100 mil that they've got. It's not play money to anybody, even the billionaires, right? The strike is a few months out, 3 months out or so. 380 while it's trading at 343. So expected move isn't, 10%, comparatively to things that we've seen in stacks. 10% is it's decent. It's not the biggest, but yeah, we'll see. Volume. Oh, I definitely one worth tracking. But again, for most people out there, each contract being around a little over 3K, probably not. Probably a little bit too rich for most people's blood. But one thing to consider is, you could maybe go with a little bit of a shorter strike, go with a little bit further out the money. But just understand that, again, if it doesn't start making that move in that direction, your theta decay will eat away at the contract price pretty quickly. One thing that I like to do too is something like this. Go keep an eye on that specific option chart. Just like I show you guys in our Stacks AI backtesting, you guys can take a look as to see if that volume shows up again. So right now, this volume, they purchased 33,779 contracts. So that's the whole volume for that for that option right now. Keep an eye on the volume as the days go on, because that's going to be your hint as to whether or not they got out of that position. And if they do, that's your cue of, hey, they've lost confidence in that position. You can kind of estimate how much they might have made or lost, and manage your own risk in those situations. You're not going to see them hold on to it and watch it go to zero. They will preserve their capital as best as they can. I'm sure they have their stop losses or their get out level set up for themselves already in that situation. But yeah, definitely $107 million being spent on this position. One of the higher premiums that we've seen.
And one thing to note is anytime you see volume outpace open interest, that shows that it's a fresh position as well. So it's not someone doubling back into something or making their way back into a position. This is a brand new, fresh off the tape position. And usually that's why it will get highlighted as unusual within stacks. It's just because the volume spiked significantly over the open interest, and there was a significant amount of a premium that was spent as well.
Yep. So yes, for Dark Silver's question, does that massive Tesla flow indicate institutional conviction? Yes, I would definitely say so at this point.
100%.
They've probably got an idea of something about to happen, some news that's about to hit. So keep an eye out for that. We'll see what ends up happening with Tesla as time goes on.
What do you think? What's your number for for like an institutional position? Mine's like anything that's over 10 million and fairly aggressive. So it's not super in the money. It's not super close to in the money, but it's also not like a YOLO Reddit call of like someone buying $1 million of like the $750 Mr. puts or calls that were bought like a month ago, and someone bought like I think 1.7 million worth of $750 calls for MSTR. Um, yeah, like what would you say your number is for when you're like, I think this is an institution versus a YOLO play?
I like that $10 million mark, but I will say it's a combination of things. Number one, you want to see them buying out of the money, right? You want to see
Yeah.
them buying out of the money. And then the other two sides of it is, are they purchasing heavy leaps? Like, are they purchasing for January of next year or January of 2027? Those are always an indicator that you want to consider. They're willing to spend that much money on the theta. The other one is the expected move. When I see expected moves well over 15%,
Hmm.
those are situations where again you're not getting into those positions and risking all of that theta decay, being out of the money. And if you don't make a move toward those numbers, you lose out pretty quickly. So the main things I would definitely say is that strike, that expected move, extremely high. I would even put the premium. I would even say 5 mil is a good, less smaller companies, if they're trading under, let's say $25 to $30, if they're trading underneath that, I would expect the premium. Anything over 5 mil is worth taking a good look at.
Yeah.
Obviously, the bigger the stock gets, the more pricey it actually is. You probably bump that up toward that 10 mil, 15 mil range, because again, those are very, very, very rare for us to see, extremely often. The other ones I was actually pointing out, I was talking about this in our stacks backtesting too. Notice when they purchase, some of the ones in Stacks AI that I really thought were interesting were last month we had these spy calls, right?
Yeah.
And they're purchasing that for uh, September of this year. So they're spending a lot of money on the theta on that. They're spending a lot of money on the time. And the strike being at 600, I mean, this has already made a decent move towards 600, you can imagine. So they're well in profits at this point. But again, $5 million on that. Same with this QQQ position, 2026. Usually when you're looking at these indices, the ETFs, so SPY, QQQ, IWM, spending a lot of money on the far expiration, is one of those situations, because you see a lot of people playing the 0 days to expiration, the weeklies, those types of things. So when they're spending that much money out on it, Stacks AI is shouting it out. It's millions and millions of dollars. And then, like I said, look at those two. 21% expected move, 17% expected move. Those are indicators that it's likely somebody that has some knowledge, and a higher probability type of a trade you might consider.
Yeah, no, I mean, Google's another good example, by the way. I think those were down like 60% at one point, and then today they were up. And if you would have just never averaged down and sat in your position, you would have been up 25%
Yep.
today. So, but if you averaged down and like kind of got your average down, you probably would have done close to 100% on that
Yep.
trade. Granted, you had to get kicked in the teeth for a couple weeks, but as soon as again, that's why we get these unusual alerts. Sometimes, like, it's something that you throw on your watch list. If it doesn't make the move you're expecting right away, it could be an opportunity for you to average down as long as you see the open interest. With these, I think open interest is really important with the
Yeah.
stacks calls. I kind of noticed
Mm-hmm.
is as long as that OI remains pretty steady and constant, who cares about the volume? Tiva was a perfect example of that. Like at one point, me and Eric were the only volume in the Tiva contracts. Like there were like there's 6 contracts in volume. I was still holding my whole position. Eric was still holding his. So like, but the open interest never dropped below the 16K that it opened up at.
Yep.
And then you saw what happened with Tiva. It was just trading flat. It would drop down to like zero point 0.1, like it would be worth $1 a contract, and then it would rocket back up to like $1.50. And then one day we woke up and it was trading at 315.
Yep.
No
Yeah.
reason, no rhyme. Earnings came out, they beat, but that OI never dropped off through that time period. So that's another thing that can kind of give you conviction through these plays is if you see an increase in open interest, that's always going to be a bullish indicator, or yeah, a bullish indicator whether you're buying into puts or calls in that point.
Yeah. A couple things with Stacks AI as well. And obviously, you can consider too, if you filter for big money and unusual, it's not exactly a Stacks AI position, but it's going to be fairly similar because they're spending millions of dollars. And again, a lot of these are going to be some pretty large expected moves. I like to filter for the buys as well, and kind of use what we've said. Are they buying out the money? You'll see this bronze medal right there, right? You'll see time. Is it short time frame or long time frame? You can get an idea of that. So if we got the timer right there, that's short term. These are just weeklies, for, some micro strategy. We'll get into that in a moment. And then you also have these long term ones. So you see the clock in here as well. Then, big money. So again, if we filter for big money, you'll see the money bag in there as well. And then this little target that I've shown you. Let me actually pull this up too. The stack signals. I've shown this. This is on our FAQ page. If you go in here, you can get a look at this as well. But just what all these signals on here allow you to understand about the positions. So for example, in these, you're not going to see too many of them being in the money because these are all aiming for out the money situations that are far targets. So, the target, the archery target as well. Just little things to consider because again, anybody who's new to options and new to this type of data flow, there's a lot going on. I understand that. There's a lot of numbers. There's a lot of stuff on the charts. Still trying to figure out what exactly things mean. That's why we've put together this intuitive way to look at things. You don't necessarily have to look directly at the details right away. Take a peek over at the signals and use the signals to your advantage to determine, what type of situation that they are getting into. But yeah, as people have said, let's take a quick look at MicroStrategy because I know that it's a commonly talked about one here. MicroStrategy gets quite a bit of activity. Let's put it that way. Obviously, recently with Bitcoin, you'll see a lot of these 516, 516, 516. These are all very short term. Now, keep in mind, they're spending what? Here, they're spending 1 mil. This one for the end of the month, $745,000. You know, these I definitely would say, right? Expected move 9%, 7%, 18% on the sell of these calls. I will point out MicroStrategy is one of those names that isn't necessarily going to move as fundamentally as you would expect. It's,
Mhm.
you know, it's at this point become a bit of like a meme stock, a bit of it's about the hype. Okay, MicroStrategy does not have to move according to its fundamentals, and it's directly correlated to the value of Bitcoin at this point. But if
I
I take
mean,
a look at this chart, right?
I was gonna say, I see so many unusual calls bought for Mike, like at least 2 to 3 a week of just like unusual like call outs that come for it that
Mm-hmm.
just make zero sense
Yeah.
for what it's doing that day. So it is a very weird, it's very weird, and I try to put it on my watch list, and then I'm like, this is stupid, and then I'll look at it 2 days later, and it's like up 1,000%. I'm like, what
Yep.
the hell? Like,
We had a Stacks AI call out of MicroStrategy that was a weekly, which is very rare. Most of the ones you'll see on Stacks AI going to be very, very, fairly long term, which makes for great swing trades. But here you can see if I were to give, I've got this Wyckoff reaccumulation picture going on right here, and if you consider this box right here of where the accumulation happens, we have it right about, I want to say right here is where it is. Okay. So right now we're at this what's called the last point of supply. We had this big jump from the spring low. We had these reaccumulate down low underneath all of that supply. Popped up. Now we're trading at the top up over here. Now I want to point out, just like something like BABA, this last point of supply, while it could very likely stay in this range for a little bit, sometimes like BABA, which I showed you guys a little bit earlier, let's go into the daily. BABA's big accumulation range was all over here, and you can see we went up to the top and we dropped all the way back down below before we came back up in here. So while the direction is headed up overall, you got to obviously still be careful with those types of positions. We never say to go all in. Make sure you manage your position, manage your risk. But I do definitely see right now, seeing MicroStrategy chop around in this range until we see a bigger move in Bitcoin or additional news with maybe what they're doing. But right now, it's just directly correlated with what Bitcoin's about to do. So if we see Bitcoin shoot up, hit new all-time highs, more people buying more, obviously because they have such a heavy foot in Bitcoin, you'll see this coming back up and trying to attack the top ranges of things as well. What's also interesting too is back when we were at this lower LPS where it reaccumulated again up here, we actually got in these positions and saw this right up toward the top. We got out way earlier than we needed to, but we saw some solid profits with that type of call out. So, some people say Wyckoff is a bit old. They say that, it doesn't happen anymore with the algorithmic trading, things like that. But I still do believe that if you look at your charts closely enough, you'll see these types of patterns. Yes, there are going to be, liquidity pools above and below that probably will get sapped before it goes up and it goes in a certain direction. But at the end of the day, I'm seeing this type of a pattern happening right now with this, because especially with this strong of a move back up. Could it hit all-time highs? The question is the time, and that's one of the big issues with options is you're not only fighting price, but you're fighting time, right? When you're dealing with just regular equity, you can you just have to worry about the price. But when you deal with options, you got to deal with the time frame of it. How far out do you want to purchase? And especially with something like MicroStrategy that's extremely volatile, be careful with your IV. Don't get into a position where IV is. I put the mark at about 80%. which means that your option has the ability to fluctuate 80% in either direction. That would be a normal standard deviation. But very quickly, very easily, you'll see well over 100% for IV when it comes down to these very sought after names, or something that's very, there's a lot of hype around. Something like MicroStrategy, be careful with those positions. It's better to be a seller of options when IV is above 100% than to be a buyer. So keep that in mind. Okay. Let's see. Last one. Let's go over Apple. Somebody mentioned Apple. And that'll be our last one. If you guys are still in here, I know the audio is kind of rough right now, but if you guys are still in here, comment for me. Comment. What should I comment? Just comment stacks again. Let me know if there's any additional ones you want us to go over before we head off of our stream. We're going to do Apple real quick for you guys.
Some interesting activity this week. We have 2 golden sweeps from today, but they were both selling calls at the 215 level, which makes sense because I think what are we trading at right now? Around 207. I'm blind. I can't see right now. 211. Okay, so like 212 is where we're at.
211.
So it looks like 215 is going to be that resistance area for Apple. Would be fair to say.
Yeah.
Because there's almost 4.1 million in calls being sold at 215. So if it hits that 215 level, expect that to execute and hard.
Yeah.
Let's look at the buys
and then
here.
Next major spot up there. Yeah, and then you got this huge volume shelf that comes up between 220 to 230. Got a lot of volume up there.
I mean, this week we're overall bullish. We're bullish as shit this week on Apple. We got 9 million going against 3 million right now. So that's what's living out there. Looks like we got a barrage of calls coming today, but it looks like a lot of this is far dated out.
Yeah.
Some of the bigger positions, like 403K on October 17th, 2025, 220 calls.
Yeah, I agree. I'm filtering for just the buys of Apple.
Yeah.
It's basically all calls, but all for, well, we got some for this month, but we definitely have some for much later in the year, 2026 even.
Oh, wow. Someone bought 207.50s, dropped 693K on them yesterday at market close.
Yeah.
Spot was 213.68. That's deep in the money.
Yeah, that's the thing about these. You see a lot of them that are actually well in the money. Right? You got the gold medal right here.
205. That 205 looks pretty until you see that it's trading at 213 and they paid like $11 a contract. $1,100 a contract for their average. Is brutal.
Yeah, and the expected moves for these, the biggest one I see, 19% here. There's a 13% expected move. But a lot of these are in the money situations. 10%, 19%, yeah. So overall, I would definitely say Apple's probably bullish overall, but for a longer term time frame. A bit of the uncertainty with the tariffs has kind of been alleviated right now, at least for the next 90 days. I know before we even talked about how, at the end of the day, these companies are going to do everything in their power to try to get something to swing in their favor. The one thing I will say here too, though, we are looking at a gap from before, from back when the tariff news was announced. we haven't completely filled that gap just yet. So I could see this coming up toward that 220 range in a little bit. But do also notice that we do have some gaps on the lower end as well. So we're kind of in not really no man's land, but we're kind of, indeterminate right now, especially as we hit these resistances from before. Wouldn't not be surprised to see this chop around a little bit, test that higher end of that gap, also come back, test out this lower end of that gap before it makes a decision as to what direction it wants to go in next. Okay.
There's no news with them either.
Yeah.
So
Right.
it's like they're pretty flat news wise, so nothing is really going to push it other than someone dropping a bunch of money into it for some reason, and that's going to be someone who knows something.
Yeah. And again, it's something, the thing that you also have to remember, this is one of the biggest companies in the world. Just a few $1,000,000 is still drops in the bucket when it comes down to it. Versus if you're looking at something, much smaller market cap, a couple $1,000,000 is going to make a very, very big difference. So you always want to consider the relative size of things when you are getting into those types of positions.
Like
But
run.
overall, yeah. Let's talk about those real quick before we get off. I'm moving some stuff around on my Robinhood so I can set it up for the 1K challenge. If you guys are still in the stream, go ahead, comment 1K if you guys want us to do a 1K challenge, where what we're going to do is we're going to find a couple of positions that are going to be more so swing trades. So it's not going to be a day trade. It's going to be something that with stacks, with what our charts have to say, Max and I are going to discuss and agree on some positions to take and, potential levels where we're going to be taking profits. We've noticed, and one of the things that we love about stacks in our software is that it's always going to help us find the unusual situations where, again, somebody behind closed doors happens to know something and they're putting their money where their mouth is. Now, we do want to warn you guys, and we've experienced it with a lot of these positions, is like he says, sometimes you're going to get kicked in the teeth for a little bit. Sometimes you're going to have to deal with some major drawdowns. But again, we will help lead that position, help you guys understand. We will not only talk about it in our Discord, so those members that are part of Stacks, members that are part of our Discord will get those notifications right away. But we will also, we'll talk about this, but very likely be posting it on social media as well for you guys. The social media ones will probably be a little bit delayed in terms of things, because our first spot that we go to is always going to be to discuss with our Discord, discuss with each other before it goes out to the public. But again, comment 1K if you guys want a part of that. Trying to take that 1K challenge, see how far we go with it. Obviously, if we can, 10x it to 10x or to 10K and above. I will tell you guys too, with my personal accounts, I've done that, quite a few times actually using stacks. Not only during the 2020 COVID drop and things like that, I did have a run up with GameStop and AMC where I took about 2K, and at one point my account was showing 44. I've also recently taken my I reset it down to 2K, brought that back up to about 19K just recently as well. It's dropped a little bit from that, but again, just showing you guys the power of options and what you guys can do with these positions. Again, comment 1K if you're in the Discord. Comment 1K, let us know, and we'll be more than happy to get that set up for you guys. We're just trying to get something set up because, for example, Robinhood only allows you to have one personally traded account. So I'm gonna move stuff over to my Webull, and then reset that. You guys may have noticed in our description below, our 125 code has been used up. Our next one is 130. There's no guarantee we'll do a 135 or 140, so please jump on that opportunities as soon as you can. These are the two best codes that we've had. There's, again, we're trying to get you guys to believe in the power of stacks and believe in what we're doing here. So use code 130 for a month of stacks. This is for new users only. if you've used the trial before, if you've used, you've been a previous member, it will not work for you. Okay. But again, there we do also have Max's Substack down below, Max's YouTube. If you want to go take a look, he's going to do those daily reviews on there. But again, Wednesday, he's saving his information for us over here. So we're gonna jump on here every Wednesday, market close, talk about what's going on. I'm gonna try to get our audio figured out. I got to take a look as to what's going on. If it's my internet or if it's actually, I don't think it's my computer. Everything seems to be running just fine over here. We also have our Beehive. Our Beehive is a newsletter that we send out every week, sometimes multiple times, but depending on what news has to say. So please don't forget to go check that out. How is Stacks different than Spot Gamma? I'm personally not familiar with Spot Gamma. Are you, Max?
No, I haven't heard of them.
No, I haven't heard of them either. I'll take a look into that and see what it is. But one of the big things that most of our users talk about is how a lot of other flow software, they provide great data, they provide a lot of things, but sometimes it's almost too much. I've had a couple of friends and a couple of other members talk to me about how they love the way Stacks flows, especially because the other companies that they've used before are too data intensive. There's too much going on. They don't know where to direct their attention. They don't know what to even look at. And while, yes, from time to time, they'll show how they found these different positions here and there, etc. What Stacks is able to do is you can filter for exactly what you want. Everything's right on one page. There's not going to be multiple pages you got to navigate through. One of our big pride and joy here is our Stacks AI. Stacks AI, you can go look at our back test, look at all our numbers, and it's basically showing you exactly what big money, unusual situations are purchasing, so you can get along with them as well. And also, as I've also heard a lot of those other softwares have extremely high entry points. I heard one was like $250 just for a month. Stacks, regular price at $99.99 for a month. You can purchase it for a full year. You get a little bit of a discount that way too. Or if you do decide to join in with some of our discount codes from time to time, you get it for a fraction of what those other companies are offering it at. So understand, I will take a look at Spot Gamma. I'll try to comment back on the YouTube channel later when I've done a little bit of research as to who they are. I'm not gonna beat up on any of those other companies. I think they all do a great job. But if you're looking for more direct or more filtered type of information, Stacks is where it's at. We're trying to get you guys solid information that is. Yes, this is exactly the case with Spot Gamma. Is way too much and is difficult to find unusual flows. Yeah. And a little history about us too. Chemo, the CEO, the founder, the one that leads our Discord, he spent almost 4 years working with different coders, different software developers, to try to get and bring Stacks to life. And it wasn't until 2023 where we put our little team together and we're able to actually put it together. Big shout out to Chef, who is our resident dev, and he's done a great job of bringing Stacks to life. Again, we're trying to get you the information. We want it to be transparent. We want you guys to understand how our things work and what's going on, especially with things like our Stacks AI. That's why we do a monthly back test. I don't know what other companies out there, what other flow software out there is directly showing you guys, hey, these are the prints we've got. This is how they're doing month to month, going over things and making sure, and back testing. I'll tell you this, we've gone through our Stacks AI and made little tweaks here and there to make sure that we got the best information out there for you guys. All right. Thank you for that question. I don't know how many of you guys made it this far. I see 10 people still watching. Max and I, when we originally started this, said we are going to do this for about a 30-minute live session. Now it's turned into about an hour and a half each time. But again, Max, I want to thank you. It's always a pleasure sitting down here, chatting about what's going on in the markets, getting people an
Yeah.
idea of what's going on in stacks. Those of you guys that are interested in trying out, go ahead and use that 130 code. It's only going to be valid for a little bit, so make sure you jump on it. There's only a certain amount of available spots for you guys. Anything you want to say, Max?
No, I think we got PPI coming out tomorrow, so keep on the lookout for that. We're definitely going to see a market reaction at open. We have retail sales this week, or did we have retail sales today? I think we had it today, maybe. Um, but yeah, make sure to just follow the flow. Don't over leverage yourself trying to make 1,000% every trade. Profit is, if you have enough time to screenshot it, then you have enough time to take profit. If you want to play risky, just sell enough to where you're at even. So then the trade is literally free. You're not losing anything at that point. If you have that much conviction in it, but you don't want to put that much skin in the game. So yeah, when it comes to like when you should take profit based on this stuff, it's really going to come down to your risk appetite and how much conviction do you have in what you're in and how much research did you actually do and again, how much time do you have, because that's going to be your biggest enemy. But other than that, just hey, come hang out with us in Discord. I post kind of the analysis I talk through on this. I post way longer, in-depth stuff on Discord than I do on Twitter. Twitter, it's just like the quick highlights. Discord, I'll go into a little more of like the context of what it could mean and any like current news. And we've found some really good trades. Like I know Chemo scalped Microsoft for like almost 3K in less than 5 minutes when I posted those. Because usually I'm only about 2 to 5 minutes late between a big purchase and what my analysis will be to when the print was. So yeah, I encourage you guys. Like I have become a way better analyst after using stacks, just because of the ease of information that it is to break down and find stuff versus having to like read through Gamma, Gex, and all these other filters that will kind of distract you almost and almost psych you out of taking a trade.
Yeah. Yeah, definitely. Again, join us next Wednesday for this. Comment 1K down below if you guys want us to do a 1K challenge. And again, if you are in the chat, go ahead, leave us a comment, leave us a like. We're always happy to do this for you guys, but again, we are doing this for that approval from you guys. So, leave us that like, leave us a comment. Just wanted to make sure that, we're not shouting out into the void, into nothing. And again, we will see you guys next week for our next Closing Bell show here with Eric and Max.